So we now focus back on to end clients. Earlier I mentioned that in the public sector there have been clearly quite a lot of blanket decisions being made. I think there's enough in the legislation to stop people from actually making blanket decisions as they were made there. But there are end clients, I think, out there that don't understand the issue, but also end clients that are perhaps dodging the issue, because I suppose if you've got 5,000 contractors and you're issuing engagements every 6 months, potentially you could have 10,000 engagements to review every year. You know, just how big is your HR department going to have to be? So there is a way of clearly avoiding the issue, and both public sector and indeed private sector entities have taken that approach, and you'll see that there's a link there, and again one of the links you'll be receiving to a website called offpayroll.org.uk, where you can actually see some of the end clients and how they're dealing with these issues. It's done on a RAG basis, so red for not dealing with the issue, amber for dealing with it, but in some instances you'll find contractors saying not dealing with it fairly. Whether that's true or just their opinion is obviously up for you to decide. And then those that are green are those that are approaching it properly, and I'm delighted to say that Markel manages to appear on the list as a green. But there are, so you can have a look on there, but there are clearly entities that are avoiding the issue. That's been evident from the banking and the financial services sector. And of course, not only is this happening now, but actually they made that decision before IR35 was deferred back in March of last year, and largely they've stuck to their guns. And of course, what they're doing is effectively saying, we don't want to engage with personal service companies. We'll engage with you, either we'll take you on as staff, fixed term contract, possibly through an umbrella company, or possibly even as an agency worker. And of course, all four of those scenarios result in one thing, which is pay as you earn, and essentially you're going to be a lot worse off unless you can negotiate some kind of a rate rise. But I think with the market the way it is at the moment, with COVID-19 being around and probably being around for a while longer, the ability to negotiate additional rates is probably a rarity rather than a reality. But the thing that clearly contractors need to do is you need to speak to your end client, you need to speak to your agency and understand what's going on. So if we move on to the next slide, please. What I'm going to do in the next two slides is talk about two surveys. Now, the first one was undertaken by Brooks and Legal into about 500, sort of slightly over 500 end clients, and of course that was taken back in April 19. I don't think many people were particularly prepared at all. So obviously in the run up to what we thought was going to be the April 2020 introduction of the changes, and at the time of the people surveyed, 59% were going to take a blanket approach. Well, clearly that is absolutely not an option at the moment, and you would be mad to try with the way the legislation is framed and the way HMRC's guidance is put together. You know, 2/5 of end clients feared losing contractors if they didn't assess properly, and I think that made sense at the time, and to be honest, it still potentially makes sense now. Interestingly, only 47% had taken steps to understand IR35 at the time, with a third working on gut feel. Now I know IR35 being status is not a black and white issue, but you know, I think people expect, you know, HMRC are going to expect a bit more than operating on gut feel. And at the time, 15% had no idea about IR35 at all. It would be interesting to know whether that 15% has changed, or whether the market has moved on. You'd like to think with the dress rehearsal that effectively we had this time last year culminating in the deferral, that 15% would be next to none, but I'm rather scared that that isn't the case. So if we can now move on to the much more recent survey, and this was undertaken by IR35 Shield and actually appeared a couple of days ago. And okay, it was looking into responses from over 3,300 contractors. So it was people coming at things from a slightly different angle. But it was interesting, some of the results that it produced, and I've only picked a few of them. There were many more that we could have looked at. So we've not got end clients making blanket decisions in the way that they were in the public sector. What we've got is almost a quarter of engagers that basically are banning limited company engagement. So it is a type of blanket decision, but it's not one that's going to fall foul of the regulations, because they're just basically dodging the issue altogether. 34%, so just over a third, are engaging things on a case-by-case basis. Well, if in the previous survey 47% had taken steps to understand IR35, then that looks to perhaps be a lower number now than it was back in April of 2019. And according to contractors, they think 39% of their clients will experience short-term damage. Well, 41% of end clients almost 2 years ago were thinking that they might lose contractors if they didn't assess properly. So that 41%, 39% figure is quite close. And 36% of contractors think that there will be long-term damage. Now, that's obviously their assessment, that's their opinion, but if they're right, then just taking this kind of sort of blanket approach, even though it isn't what we understood from previously, I don't think is very clever. And I think we will see the pattern changing over time, because if end clients start losing resources, start losing the best contractors, then essentially I think they will have to revisit what they do. And a figure that I forgot to put on the slide, but again, the Shield survey suggested that actually here we are with 3 months to go, and 52% of engagements have yet to be assessed. So that's an awful lot of work that needs to be done in the 81 days that remain. And the last statistic, which was on the slide, and I also wanted to mention, is that apparently 52% of engagers are using CEST. Now, I'm going to come on to CEST, but you may think, and this is me being perhaps a little bit facetious, if 15% of end clients didn't know what they were doing 2 years ago, you could argue it's now up to 52% if they're using CEST. But let's move on to the next slide. So, and indeed it is CEST. So why don't we like CEST? Why would we not ensure a CEST determination? Well, it's something that can be undertaken voluntarily, but it isn't definitive. In 15% of cases, it doesn't give a decision. If you approach an independent consultancy, if you have a contract review via the IPSA contract review service, you might be told that the engagement is borderline inside or borderline outside, but you will never not be given an opinion. So, and that's important because actually end clients are obliged to give an opinion. So why would you use a tool that 15% of the time doesn't give you an opinion at all? It's clear it doesn't fully match case law. Its sort of current reiteration is probably better than it was, but it's still not as perfect as it needs to be, and it still doesn't ask questions about mutuality of obligations. Now, HMRC have always ignored mutuality in the past, and will try and do so. But of course, with the recent case, with the referees case, that was actually won at both the lower tribunal, or first tier tribunal, and the upper tier tribunal, on the basis of mutuality of obligation, or certainly one of the key factors. So they are going to have to address this issue, but it's still not made its way into the CEST tool, and it can clearly be manipulated. Why would you want to rely on a tool that can be manipulated? And indeed, HMRC have been very clever and said, yes, they'll stand by the results unless some form of compliance activity determines that the result has been incorrectly put together. So it isn't really a worthwhile tool to use, but unfortunately it seems like over half of end clients are. Can we move on to the next slide, please? So what's the impact on you guys? Well, you're rarely going to be the decision maker, but you can influence things. So there's no point sort of going to end clients and sort of begging with a begging bowl. I think you've got to produce information. So perhaps get yourself a contract review, and you know, even perhaps look at buying tax losses insurance. That's the kind of evidence that somebody independent has said this engagement is outside of IR35. And if that engagement is continuing after April, surely that's a good reason for the end client to take a view that it should remain outside of IR35. But unfortunately, you're influencing, you can't make that decision. If they decide otherwise, then they can back that up. Unfortunately, there's not a lot you can do. You could argue is go out there and find small company and overseas engagements, because then you're in charge of your own destiny. Well, that's probably easier said than done. But where you are in engagements where the engagement is deemed to be inside IR35 by the end client, what you're going to find is, one, your day rate, if it was £500 a day, that is now going to have to be, that is now going to be the day rate inclusive of all of the deductions. So once you've taken off apprenticeship levy, employers' national insurance, then you're suddenly on a day rate that's probably closer to £440 a day. Then you're going to be taxed on it. And because it's inside IR35, you're going to, the triple whammy is that you're going to lose your travel and subsistence. And if you like, the quadruple whammy is that you lose the 5% deduction for notional expenses. You can retain that on an engagement that you deem to be inside IR35 if you're working for a small company or an overseas company, but you don't retain that if you are working on an engagement where the end client is making that decision. So it's loss of opportunity, it's loss of earnings. Yes, apparently you have an appeal process, but we'll just see how valuable that turns out to be. I think you can guess from my approach that I don't think it's really going to help you a great deal. Something else that you perhaps do need to look at is that there's always been warranty clauses in contracts, and it may well be that agencies are basically saying if they end up with the liability when they weren't expecting it, they're going to look to you to pay that liability. Now, it won't be a tax liability, it will be a warranty that you have indemnified them for. Now, whether they actually choose to enact that clause is an interesting thing. Legally, they probably can, because your company will be deemed to be a sophisticated entity, and therefore, you know, they've signed a contract with this warranty. Whether an agency wants the reputation of chasing after its contractors and suing them is another matter. And of course, if you were to close your company down before the matter is resolved, they're not going to get the money anyway, so it's going to be a bit of a Pyrrhic victory. So just be aware of these warranty clauses. Whether anybody enforces them or not, I really don't know. Can we go on to the next slide, please? You know, you need to big up the importance to the business. You need to talk to your end clients. As I've said, you can influence. I think I've really covered most of these issues off. But if all your engagements are inside, you're going to take a whopping hit in terms of income. And I'll just say something very, very quickly about umbrella companies. That clearly is one of the options for people that don't wish to be engaged through their company, or a scenario where an end client says we're not engaging people through their own companies. If an umbrella company is compliant, so yes, it makes its deductions for providing the services that it does, it deducts tax and national insurance properly as it should do, there is no reason why you can't operate through an umbrella company, it's compliant. That's absolutely fine. Yes, you're going to pay more tax. You can't get around it because you're being taxed as an employee. However, if you've got an umbrella company or indeed any other provider coming along and talking to you about things like loan arrangements, or when I was at Accountex, which is the accountants' big exhibition every year, I actually had a contractor come up to the stand and had been offered an engagement where he would be paying his, I think, pay as you earn, part of it via Poland. No, I don't know why either, but if anybody is coming up to you with solutions like that, get another barge pole, because you just need to avoid these. You need a longer barge pole. Just do not get involved. If it's a compliant umbrella company, absolutely fine. There's no reason why they shouldn't be used either by agencies and end clients, or indeed by contractors. So if they're compliant, that's fine. If they're offering anything fancy, starting with keep 85% of your income, run and keep running. Let's go on to the next slide, please. Okay. Just really to say that HMRC have made a number of pronouncements to say that they are not, basically, unless they're presented with a gift wrap situation where somebody has deliberately been fraudulent or criminal in the decision-making process. If your engagement's deemed to be inside after April, when you'd perhaps deemed it outside prior to that, they are not going to make these retrospective inquiries. I tend to believe that, not because I'm completely naive, but because HMRC need to police the future. If they don't police the future properly, then we'll be back where we were by the mid-noughties, where everybody just thought, well, what the hell, HMRC are not doing the inquiries. We're just going to treat every engagement as being outside of IR35. They cannot afford for that sort of complacency. And the other issue is, why keep doing the inquiries they've been doing for the last 20 years, which pretty much outside the broadcasting sector have been largely unsuccessful. So I think I do accept that, but I'll let each of you judge for yourselves. Next one, please, Andy. So the overall conclusion is, if I was a weather forecaster, I'd say it's an unsettled picture. People probably will ask the question, is it going to be deferred? I can't actually see any reason why HMRC will, because I think the damage has been done. Those 23% of end clients that have already decided not to engage through limited companies, they made that decision 12 months ago. They've stuck to it in a large part. So I think damage has been done. But I also, as I said before, don't think banning PSCs is a long-term option. And these changes, as irritating as they are, as costly as they are, as frustrating as they are to contractors, and some of those things probably apply to end clients and agencies as well, it's not the end of freelancing. It won't be the end of freelancing. The British economy works on the basis of freelancing. There's 4.5, probably actually close to 5 million self-employed people out there, and freelancers in the sort of personal service company type scenario probably represents a good 10% of that. Okay, things will change. The way a lot of you will be engaged will change, but freelancing, it's not the end. And do wait, because I think the picture will change as end clients realise that a blanket assessment or avoiding the issue is just not the way forward.